what is hard in general is that you start and you have nothing. And when you have nothing, it means that you have absolutely nothing. You have no business model, you have no ways to make revenues, you have absolutely nothing. So you need to start with pretty much just a vision. So I started university in France. I was an engineer, so I graduated from Polytechnique in France and Pont-et-Chaussée. After that, I went to MIT in the US. And after school, so after MIT, I went to create a startup called UKB. So I was a CEO of UKB. That was at the end of the 90s, from 1998 to 2003. After that, I went into banking. Where I started at SocGen, then went on to RBS, and I'm currently at Citi. Yeah, UKB was a startup that was around address books, and with the idea that you could self-update your address books through social networks. If you remember, it was 1998, so actually very, very early as a concept. We brought UKB from a very small startup, where 3 co-founders, into a 50-people startup with a VC funding, with an office in New York and Paris. And UKB was actually a startup which was very interesting because huge vision, huge dreams, but a timing that was totally wrong. Which is quite important when you look at startups in terms of you need to have a lot of things right, and one of them was timing. And in the case of UKB, I think we were too early. We were 6, 7, 8 years too early. So UKB was an idea that I got when I was traveling in Thailand at that time. And when I was in Thailand, I had a Palm Pilot. So you might not know what a Palm Pilot is because it's from a long, long time ago. And I had a Palm Pilot where basically you could store all your address books and a calendar. And I lost my Palm Pilot. And I thought there should be a way so that when you lose your PDA, then you could retrieve the information. And actually there should be even a better way so that when people change their information, then it's actually updated automatically in your address book. That was the idea around UKB. It's something I learned actually when you launch a startup, and you remember that I was an engineer by background, but the first job that you have as an entrepreneur is to convince people and to sell. And you have to sell to anyone. You have to sell to your first co-founders, you have to sell your vision to your employees, to your investors, and that's what I did basically. And what you sell is more than just, I want to create an address book which is on the internet. What you sell is really a vision, is really a dream, it's really what you want to accomplish. And we had a big vision, we had a very big dream, which was we wanted to connect the world, and we wanted the world to be connected in an automated way. So it was a great vision, but in that case, the timing was quite off. So you do face, as an entrepreneur, you do face challenges pretty much every day. So it's always about trying to find the next problem to solve. So that happens all the time. I think in terms of challenges, one of the main challenges that we had, which seems a bit ironic, is that we had too much money. We raised a lot of money actually. We raised a bit more than $15 million, which was quite a bit at that time. And because we raised so much money, there was an intense pressure to grow very, very quickly. And everything has its own timing, and you can't grow faster than your market, you can't grow faster than your organization. So I think that was one of the main challenges, which was because we had raised so much money, we had to grow very, very quickly. That was one. The others are, all the normal things that you would expect, from a startup. I think we did all of them. All the mistakes that you would have in a startup, we did all of them in terms of how to choose your co-founders, how to make sure that you get, the proper co-founders, in terms of the people you hire, in terms of how you manage information in your organization, in terms of the products or the technology that you have to use, in terms of the market you'd go after. I think we did, all of them in terms of making the mistakes and after that trying to solve them. I think it's hard to just point to one particular high point. I think the whole experience was a high point. 5 years of that was very, very intense, basically. And every day you just woke up and you really wanted to go to the office, you really wanted to be part of the team, and you really wanted to build something. So all the 5 years were I think, a high point. And I think the main reason is that I was surrounded by people who shared the same vision. We were part of the same team, and all the people were trying to build the same thing in the same direction. So, not any particular high point. It was, all of that was. Yeah, in general, entrepreneurship is much harder than what people think, and I do mentor quite a lot of startups. So I see a lot of startups going through all the pains from a one-man show to pretty much a much bigger team. And what you see is that obviously it's the story about unicorns, billion-dollar companies. You see that in the newspaper, and it all looks very well, but we don't really see the background behind that, which is much harder. And I think some of that, what is hard in general, is that you start and you have nothing. And when you have nothing, it means that you have absolutely nothing. You have no business model. You have no ways to make revenues. You have absolutely nothing. So you need to start with pretty much just a vision. Most people just start with a vision, and from a vision they try to build something. And what we see is that for most entrepreneurs, that would be their first time experience. And so they would be quite disappointed between what they see in the newspapers and what they actually face on a day-to-day basis. It's much less glamorous than what you think. It's much harder, especially when you come from a large organization, when a lot of things are very easy. When you're an entrepreneur, nothing is easy at all. And I think in general, that's where you see the difference between real entrepreneurs and not. A real entrepreneur, what I like to say is that a real entrepreneur always faces the impossible. Yeah, so UKB went through a huge phase of growth, pretty much from 1999 to 2001 to just after the bubble, basically, where we had raised quite a lot of money. After that, it was much harder, and it was much harder for a few reasons. One of them was that obviously it was the crisis, and the other one was that we had chosen the market, which was telecom operators, which was a very, very challenging market. So after a few years, we saw that it was very difficult to have traction from a commercial standpoint. We still had a lot of traction from, I would say, a vision standpoint, from a communication and press standpoint. But from a commercial standpoint, we didn't have traction. So what we did is that we restructured the company, and with our initial investors, we managed to find an exit for UKB. When I look at the startups I mentor, when I look at startups in general, that's definitely the main reason for failure. A lot of startups fail because of co-founders. And the main reason is that people don't think too much of a co-founder. And if we had to think of that, that's exactly the same reason why you would never expect to find your husband or wife on Tinder. People tend to hurry the decision of co-founders way too much. They would normally, for example, if I was a marketing guy, I would say, I want to launch a startup, I need a tech guy. What kind of tech guy? I need someone who has created a marketplace before, so I'll talk to a few friends and see if someone has created a marketplace before. I find the guy, that's it, I have the co-founder. And that's the problem. That's the problem, because you will be spending years with your co-founder. You will be spending days and nights with your co-founders. You will have very, very important decisions in terms of funding, in terms of hiring employees, in terms of strategic decisions for the company. So there's no way that you can hire or find a co-founder just as if you were finding the co-founder on an internet platform. I think it can work very well. Actually, you don't need to have a co-founder, and it really depends on your character. Uh, what is the main reason for you to have a co-founder? You have a few different reasons why you might want to have a co-founder. The first one is that you want to have some skills which are complementary to yours. The second one is that you want to have someone you can discuss with and make sure that you're taking the right kind of strategic decisions. The third one is that you might just want to work within a team. You don't like working by yourself. The first two reasons are not good reasons to have a co-founder. In terms of skills, you can always find external people who can help you for the skills. You can hire someone, you can have someone on an advisory board or as part of your board member, you can have external consultants. So you can have people to bring you the skills if you wanted to. Same thing in terms of strategic decisions. Your board should help you on the strategic decisions. Obviously, if you want to be part of a team, then it's better for you to have a co-founder. But the reason for having a co-founder, which is I need to have this expertise or I need to have someone who will give me some strategic advice, is not a good reason to have a co-founder. A very good reason to have a co-founder is to find someone who shares the same value, the same vision that you have, and with whom you really see yourself creating and building the company. That's the reason why you want to have a co-founder. There was nothing planned at all. I didn't intend to go into banking. When I finished UKB, which was in New York, we decided to move back to Europe, and we chose London. And actually, I was going to work in telecoms again, and I was going to work for Symbian, this joint venture between Nokia, Ericsson, and Samsung. And I just happened to meet at that time the CEO of SocGen Investment Banking, who told me that I should really join banking because banking and the trading floor was very, very entrepreneurial, which it was actually. And that's the only reason why I joined banking. There wasn't anything planned. Yeah, so at Citi, I am in charge of macro structuring. So macro structuring is a group that works with our largest clients, which are mainly insurance companies or pension funds. And we work with our clients to solve issues that they might have, which are usually quite complex issues, usually financial issues or others. Yeah, so it was initially a shock. I think it was a shock for me and also the people at SocGen, especially the person who had to train me the first day when he said, okay, so now you just sit down and I show you how you will have to communicate through Bloomberg. And I said, what is Bloomberg? And that's when he realized that I knew absolutely nothing about finance. But what I've done in finance since then, at SocGen and RBS and Citi, has actually been very, very entrepreneurial. So every time it has been about building a business. So at SocGen, it was building a business for UK clients. At RBS, it was about building a business on the structuring side. And at Citi, it's very, very similar also. So within those very large organizations, my role has always been quite entrepreneurial. So in that sense, it hasn't changed that much, except that obviously I'm being part of a much larger organization. No, I don't think so. And the main reason is that I think there's an age for everything. What I like doing at the moment, I like being involved with startups. I'm still very, very involved with startups, but the value that I bring is very different from the value of, I would say, a 23-year-old in terms of building the startup. So I do have obviously much more experience today. I've seen much more. I do have a much bigger network. And there are definitely things that I feel that I can bring to an entrepreneur, and that's what I like doing. But on the other hand, there are things that I think the new generation can do much better than I do. I think it won't be that different in 2020. I think we will still have large institutions, large banks, large insurance companies, asset managers. At the same time, you will see quite a lot of those small startups being much bigger. You mentioned TransferWise, for example. It could be the equivalent of a TransferWise and Funding Circle, etc. I think you will see a lot of the startups being very focused on some verticals. And so the verticals could be on the payment side, on the FX transfer side, could be for SMEs, etc., etc. We're just seeing a lot of them. You will start to see some consolidation. For example, in peer-to-peer lending, you're starting to see some consolidation. You have so many of those startups, and at the same time, it costs a lot to acquire customers. So you will see consolidation, like Funding Circle, for example, expanding into Europe, or other companies expanding from the US into Asia, for example. So this first trend, we will see. I think in 2025 or 2030, it will be, or it could be quite different. And in terms of the big players at that time, it's hard to know. It's very, very hard to know, because if we remember how the world was 10 years ago, the world was very, very different in terms of a lot of the different industries. If we look at the media industry, it was very different. Travel industry was very different. So 10 years down the line, I think it's a big question. By being very organized and having no social life. So my work at Citi does take quite a bit of time and can be quite intense, but there's an upside. And the upside is that I don't have to work at night and weekend. So that means that my nights and weekends can be used for other things, and that is what I would call my night job, which is about mentoring startups, spending a lot of time with entrepreneurs, writing my blog, for example. It really started because I wanted to be more organized, and I wanted to be more optimized. Since my days at UKB, I've been mentoring quite a lot of people, mainly friends and friends of friends, but usually on very random startups. So it could be startups linked to fashion tech or to biotech or other things, which I have no idea about. And I love technology, I love innovation, and I love finance. And I thought it doesn't make any sense for me to mentor people on things I don't really know about. And what interests me is to find the next Google of finance. That is what is of interest. So I thought I wanted to have much more leverage, and that's how I started Disruptive Finance, so that I could share my views in terms of where I see the world going, and also because that allowed me to source much more interesting startups in terms of mentoring, in terms of meeting people, in terms of seeing interesting projects. So Disruptive Finance was pretty much my platform to be more organized. The best advice for me was the one I received 7 or 8 years ago when I was at RBS, and when we had a seminar with a coach. I never had a coach before, and I never even considered a coach. It just seemed a bit crazy to have someone to talk to about any kind of issues that you'd have. But actually, having had a coach has been the best experience I've had over the last 8 years, and I still have a coach. And the reason is very simple. Is that even when you're an entrepreneur, even when you work in banking, even if you have a great career, even if you're very highly performing, from time to time, it does make sense to stop, take a step back, and think of what you're doing, of whether you're doing the right thing or not, whether you should change something or not. And in our world where we always run, the coach basically helps you to know if you should keep running or not, if from time to time you shouldn't stop, or if you're not running in the wrong direction. So having a coach, which is very different from a mentor, it's not a coach is not someone who will give you advice. A coach is someone who will force you to think by yourself, which in our world, I think we don't have that much time to do. So that's definitely one of the advice that have changed my life. So some of the things that haven't changed, I think, is that in terms of motivation for me, it's still about doing things that have an impact, doing things that will change the world to a small extent or to a big extent, but things that have an impact. So that hasn't changed at all. I think what has changed is that I am much more demanding now in terms of results, just because I've had more experience, I would say, in the professional world. I've seen also the impact of results. So I'm much more demanding in terms of things that you can measure, in terms of metrics, in terms of, for example, it could be P&L, or in terms of real impact. And also because with in terms of time, you are limited in terms of time. So I think that is what has changed. It is perhaps being more demanding for results. I don't think I would change much. Starting as an entrepreneur is definitely something I would recommend to anyone. So that I wouldn't change at all. After that, my experience in a large organization, I wouldn't change that at all. I think what I would have changed when I was an entrepreneur is having better mentors, or not even better mentors, having a mentor. I didn't really have a mentor actually at that time, which was also less common, I would say 10 or 15 years ago versus now. But having someone who has gone through the process, having someone who has done all the mistakes that you will be making, actually is quite helpful. And I think, for example, when I had my company, having a mentor could have helped quite a bit. It's very, very hard. It's very hard. Now I'm more on the other side. So I think it's hard to find a mentor. It's very, very personal. It's a bit, for me, a mentor or a co-founder or an advisor, that's all pretty much the same kind of issues, which is there's the objective things, the skills that you're looking for, the experience that people have, the things that you can write on a sheet of paper, and there's the personal things, which are perhaps even more important in terms of the vision that you would share, the values that you would share. So those two things, the first parts you can find on a CV pretty much. So for example, if you were launching, let's say, a social media startup, then you'd want someone who might have some experience of having done these kind of things before or being in social media. But that's only half of what you're looking for. The other half is someone who'd share the same values as you. And I think this is something that startups or entrepreneurs tend to forget, which is the value part of it. Values are very, very important, and not sharing the same values usually lead to problems down the line. And for a mentor, it's even more important, I would say. I think the advice I would give to any 23-year-old is be an entrepreneur. And not necessarily be an entrepreneur and create your own startup. Even if you work in a bank, be very, very entrepreneurial. We know that the next 15 years, 20 years will be very, very different. We know that technology will revolutionize a lot of our businesses, which means that whatever you do today is likely to be totally different in 10 years' time. So if you can't adapt, it will be difficult. And the beauty of entrepreneurship is that you always have to adapt. That's what you start with. Entrepreneurship is always about solving new problems. It's always about facing new challenges. It's always trying to adapt to a new situation. And I think that's a state of mind, which is very, very important. So whether you do it as part of your startup, whether you do it within a bank, knowing how to adapt is very important. Knowing how to do a business plan is very important. Knowing how to plan a project is very important. So being an entrepreneur, I think, is a skill that anyone should have today. No, that's hard to say, because obviously, we do read, quite a lot about millennials. I have, obviously quite a few in my team, and I think that millennials now have a huge amount of pressure, on their shoulders. On the one hand, it's the generation which has been brought up with the internet, with technology, which is very familiar with all of that. But at the same time, they're entering into a world where a lot of things are very uncertain. There's much more uncertainty for millennials than for my generation 20 years ago. So I think that the fact that millennials want to change jobs and all these kind of things is also understandable, just because there's much less certainty today than 20 years ago. You have both, actually. You have both. You do have startups, challenger banks, for example, like Atom Bank would clearly be competing with banks with the idea that they can do something which is leaner, cheaper than a traditional bank. But on the other hand, you do have startups in the FinTech space which are providing to banks. So if you're thinking of Algomi, for example, that does bond trading, Algomi only works with banks and asset managers. So you do have the whole spectrum of FinTech startups, from competition with banks to working with banks. In the case of FinTech, I think the timing is really now. Finance is one of the rare sectors that haven't been that impacted by technology. And this is happening now. This is happening now on the consumer side. This is happening now for investment banks. This is happening now for asset managers, for insurance. So all of that is happening now and for the next 10, 20 years. It's very, very hard to say because you do have quite a lot of different profiles of founders. And I don't think there's a common dream of founders of FinTech. I think if you had to ask me, that would be about how we can use technology, how we can use processes, how we can use the fact that people are changing their behaviors to redesign finance in a different way. For example, the way that you pay with Uber is obviously very, very different from anything we would have imagined 10 years ago. You enter into a taxi, you get out of the taxi, you've paid, end of the story. This is something that exists today. This is something that people never imagined 10 years ago. And I think that's just a very, very small example, but finance in general, whether on the retail side, whether on the investment banking side, on the asset management side, will be very, very different just because new behaviors will be created. That's all about behaviors. And so when I was talking about timing, it's all about that. It's not about just the technology and creating new products which are just do things that someone would have dreamed somewhere. It's that the behaviors of people have changed. The way that people use their mobile phones has changed. The way that people are much more trustful about things online, for example, has changed. The way that people think of the digital world of things which do not have to be materialized, for example, has totally changed. So I think it's all about behaviors which will bring new products in the future. Successful for me would be Bill Gates. And Bill Gates is the ultimate example of successful, of someone who has had a huge economic success, a huge success in building and developing something, but at the same time is giving it back to society. Visionary for me would be Sergey Brin of Google. Is someone who has a vision of how the world can be in 10 years' time, in 20 years' time, and is implementing it. And genius for me would be Mozart, someone who can create things that nobody else can create. Dead or alive? Perhaps dead. And perhaps there would be people like old people. Old people, for example, Queen Victoria would be one. The other one could be Jules Caesar, for example. And the third one could be Christopher Columbus. And the reason is that I like history in general. And I think in our world of technology, we tend to forget that humans don't really change that much, and that there's much that we can learn from history.